Hi there, it's Jason Goebel with Faithful Insurance. I just wanted to take the time to give you a quick video proposal and introduce myself so you can put a face with my name. I've been in the insurance business now since 2001, and we opened up Faithful Insurance in 2017. We picked Faithful Insurance because it is our motto. We're Christians, and mission statement is loving people through insurance. And one of the ways we do that is by educating our clients to make sure that they're not just paying a dollar figure, but they're aware of what the actual insurance is doing and what their coverages are for. Also, as a note, if we're doing this video, we're doing this as in a homeowner's insurance quote. We also offer other products like business insurance, auto insurance. And if we bundle up your home and auto, we're able to save you even more money. We do a free, no pressure quote for auto insurance as well if you're interested in that. Again, we might be able to save you some money, but more importantly, we want to look and make sure that you have the right coverages to protect you and your family, because for auto insurance, it's tricky. People think full coverage, meaning that if they have full coverage, they've got everything that they need, and that is not true whatsoever at all. There's limits involved in that, and you could potentially be underinsured. If you are, you could be in a position to where you could pay thousands of dollars out of pocket if something does happen, and we don't want that. So, but without further ado, I'm going to get into the homeowner's insurance quote here for you. So the first section on the homeowner's policy is the dwelling. The dwelling amount that you're seeing in the quote is not taking into consideration the purchase price. When you purchase a home, you're purchasing the dwelling, and you're purchasing the land, and you're purchasing the market value that fluctuates. On the homeowner's insurance, we're not worried about the market value, and we're not insuring the land either. It's just the dwelling structure. So your home, for an example, could be worth $500,000 if you were to sell it or if you bought it, but we may only insure it for $200,000. It just depends on the square footage. We have an estimated calculator that tells us what we need to insure it for, and we normally put in what they call an extended dwelling coverage on there just in case we undershoot it. So let's say we're insuring it, and it tells us, the calculator says insure for $200,000. The extended dwelling coverage, it usually gives us an option of either 25 or 50%. Most companies allow us to do 50%, but not all. So depending on the company that you have, and you'll see that in the quote, it'll show either 25 or 50%. If it's 50%, to give you an example, let's say it's a 200,000 dwelling, 50% extended dwelling means that they're going to give you an extra 50% above and beyond the dwelling. So at 200,000 with the extended dwelling at 50, you'd have actually 300,000 for the dwelling coverage. Your personal property is your content. So your food, your clothes, your furniture, all that stuff, and it would be covered at brand new, like, kind, and quality. If you have higher valued items for jewelry, guns, or any other high valued items, please let me know, because we need to insure those separately. Guns, typically there's a $2,000 limit on there if they're stolen, and for jewelry there's only a $1,000 limit if it's stolen. So if you got items that are worth more than that, we would insure it separately for you. Loss of use, this would be in the event that you couldn't live at your home. Let's say there's a kitchen fire and you had to live somewhere else, but you're still paying your mortgage. We would put you up in a hotel or maybe even Airbnb, depending on the length of it, and we would pay for that up to whatever the limit is on the loss of use coverage. Liability coverage for personal liability, you're going to see it's probably either a 300,000 or 500,000, and this is protecting you in the event that somebody sues you. So if they come over, they get injured and want to sue you, or it could be off premise worldwide. So I use the example of you're playing golf, let's say, and you hit somebody in the back of the head with a golf ball, and they want to sue you. This limit would cover that up to 300,000 or 500,000, depending on the limit. Medical payments is like a third-party coverage. We typically only do $1,000 to save you a little bit of money on that, and the reason why we only do 1,000 is because if they want more than 1,000, they would come after you on the liability limit, which obviously would give you 300,000, 500,000. The minimum or the maximum medical is only 25, so it's not going to go very far on that. Deductibles. So the deductibles, typically $1,000 is the minimum deductible. If the premium comes back and it is over $1,000 on 1,000 deductible, we will bump the deductible up to 2,500. And the reason why we do that is because statistically, you only have one claim on your home, the average person, every 10 years. So if your premium is over 1,000 with 1,000 deductible, typically the $2,500 deductible option would save you a couple $100. So if you're saving $200 over 10 years, that's $2,000. That means you're going to save more money by having a higher deductible. That's hence the reason why we do that on that. Doesn't mean we have to do that. So if you get a quote and a $2,500 deductible and you really want 1,000, we can do the 1,000. We just do that as a courtesy for you. Wind hail deductible in Arizona, we match it to whatever the regular deductible is. So it'd be the same. Other structures is anything detached from the main structure. So if you had a fence line, probably do, or if you had a storage shed that's detached from the home, or maybe a separate garage, or if you had a casita. And typically the other structures is going to be 10% of whatever we're insuring the home for. So if you have a casita, we need to know, because other structures at 10% is typically not going to be enough. We would want to increase this to cover your casita. Loss assessment is if you're in an HOA and they assess a fee, let's say common walls need to be painted and they assess you $1,500. If we have that coverage on the policy or at it, you could be covered for that. Another popular coverage on homeowners is sewer and backup. This is an extra endorsement. It does cost a little bit extra depending on the amount you choose. It could be anywhere from 5 to 50,000, but this would cover you in the event that there was a backup from the sewer line. So outside of like your front or backyard, and it backed up into your house and made a mess. So it backed up into the kitchen or toilet or the shower, and it damaged your drywall or damaged your carpets or your tile. You could have coverage for that. If it's not a sewer backup, so let's say there's just a busted pipe, or let's say you had a backed up toilet or a sink or whatever, and it damaged those things. If it wasn't from the sewer line, your normal policy would cover that without this endorsement. So this would only be applicable from the sewer backup. Replacement cost, we think we talked about that. That would be for your personal property. We would replace it at brand new, like, kind, and quality. And that's it for the homeowner's policy. If you have any questions, please let me know. I'm going to send this quote over to you, some details on it, and let me know if you would like to move forward or if you have any additional questions. Thank you so much for your time.